After starting the year on a blistering pace, the Canadian real estate market is starting to show some signs of cooling off. Will this cooling down also cool off this crazy increase in house prices in Canada we've been seeing? Let's take a look in this year, June 2021 Canadian real estate market update. Hey everyone, welcome back to another Canadian real estate market update here on Prairie Real Estate. If you are new here, my name is Matthew Fife. I'm a real estate agent from Regina, Saskatchewan, and I want to educate you all about Canadian real estate. Now, these monthly updates, we're not just going to read the press releases. We're going to give you years worth of data that I have collected on sales, new listings hitting the market, pricing trends, inventory levels, and I have insight from local realtors in each one of your markets so you can get the inside scoop on what's going on in your market. All I ask for in return, if you like the video, hit the like button. If you want to know more, hit the subscribe button. And of course, leave me a comment below. I love answering those comments. As always with these Canadian real estate market updates, I've got each city segmented out. So if you want to jump to that city, right here, YouTube timeline, you can just jump to that. But if you just read the press releases, all you're going to know is where we are this year and how it compares to last year. But we're not in normal times right now. You got to know how this compares to a more typical or normal year. And that's why I always look back at the 5-year data. It's got much better context to what a normal year looks like versus right now, because we are not in normal times in the Canadian real estate market. It doesn't make a lot of sense looking at that year-over-year data and just the quick headlines from that press release. But before we get into the in-depth numbers, we got to give you another terrible joke. What do you call it when somebody makes a mistake on a headstone? A grave mistake. If you have a terrible joke that I can use in the future, put it in the comments below so I can use it on a future episode of Prairie Real Estate. Homes in the Regina real estate market cooled down. Of course, that is if you call 5 less sales cooling down. There are 387 houses sold in the month. That is the second busiest month all time in Regina's history. It's up 65% versus last year. It's also up 29% versus the 5-year average. There were 646 new homes listed for sale in the month. This is actually the second consecutive month in a row now where listings have declined. Typically, we see that May is the month where the most number of homes are listed for sale in Regina, and now we're seeing a little bit of decline. It is up 33% versus last year, and it's down 6% versus the 5-year average. There were 1,176 homes for sale to start the month. That is equal to last year, but it is down 22% versus the 5-year average. That puts Regina's months of inventory to exactly 3, meaning they're right on the edge of a balanced market overall. But that stat is a little bit deceiving because there are segments of the Regina market that are still red hot, absolute sellers markets, while other parts of the market are more balanced or even in buyer's market territory still. The composite benchmark price for the city of Regina, not surprisingly, jumped once again. It's up to $266,000. That's up 8% from last year. And that puts prices within 13% of their all-time highs in the city of Regina, which was 2012. Remember, at one point, 2019, prices were down 25% from their all-time highs. Typically, we see the number of homes sold peak out in June, and those listings have peaked out in May. This, of course, has not been a very typical year in the Regina real estate market, so we're going to have to check back next month and see if sales do end up peaking or if we continue on this downward trend that they are right now. Coming off of record-setting months in the Victoria real estate market, sales actually cooled off a little bit, which is unusual. We should see them accelerating at this time of year, but there were still 1,049 homes sold in the month. That is up 130% versus last year. It's up 19% versus their 5-year average, which is 871 homes sold in the month. There were 1,365 new listings put up for sale in the month. That is up 24% versus last year, and it is up 3.8% versus their 5-year average, which is about 1,400 homes that are usually put up for sale in the month. Active listings 1,450, that is down 46% versus last year, and it's down about 53% versus their 5-year average, which is about 2,500 homes active for sale in the month. That puts their months of inventory at 1.4. That is a slight improvement from last month's 1.3, but still very clearly a seller's market across the Victoria real estate market. Their composite benchmark price is about $800,000, and that is up 12% from last year. While sales did slow down a little bit, so did the number of new listings coming on the market, and they slowed down by even more than the new sales decline. That meant the inventory has stayed static pretty much all year long. There's only about a 10% variance so far from the most houses in the market to the least number of houses in the market in the Victoria real estate market, where normally that variance would be about 34% this time of year. This is a time of year though that we should see sales start to cool off a little bit and listings also start to decline. But of course, we know right now, this is not a typical year in the real estate market across Canada at all. I said last month I wanted to see if the slowdown in sales was a trend down or just a blip along the way. Generally, May is when we see the most number of homes sold in the Vancouver real estate market, and they had another month of down sales. There were 4,268 homes sold in the month. That's up 187% versus last year, but it is up 28% versus their 5-year average, which is about 3,200 homes sold in the month. There were about 7,100 new listings put on the market. That's up 93% versus last year and up 23% over their 5-year average, which is about 5,600 new listings put up for sale in the month. Active inventory, just shy of 11,000 active listings. That is down 4% from last year. It is equal to their 5-year average, which is about 11,000 active listings. That puts their months of inventory at 2.5. That's slightly up from last month's 2.1. Benchmark price in Vancouver, $1.172 million. That is up 14% from last year. Talking with local real estate agents there, their insight they had for me was one that was really interesting, and that is west side houses in Vancouver are ice cold. 9 months worth of inventory there. That means it's a buyer's market in the west side for single family homes in Vancouver. That being said, west side homes in Vancouver aren't exactly the most affordable, but it is an ice cold market there. On the flip side, townhouses and condos on the east side of Vancouver, that is a very hot segment right now, definitely a seller's market. Generally in May and June is when you see sales activity and new listing activity peak in Vancouver before a little bit of slowdown through the summer, and then a little bit of a bump back in September. But of course, this isn't exactly a normal year. We're still seeing very elevated levels of activity. Yes, sales declined, so did listings, and new listings declined at a faster rate than sales did, which has kept inventory levels much lower than we would expect to see. Until you see inventory levels across all the different price points and the different product categories in Vancouver tend to more balanced, might be even a buyer's market, we're going to continue to see this price appreciation like we're seeing in Vancouver right now. The Calgary real estate market continues to eat up the losses that they have had for the last 7 or 8 years of price declines. There were nearly 3,000 homes sold in the month. That's 177% above last year's numbers. It's 62% above their 5-year average, which is about 1,600 sales in the month. There were 4,500 new listings put up for sale in the month. That is up 89% versus last year. It is also up 29% over their 5-year average, which is about 3,400 new listings coming up for sale in the month. There are about 6,800 active listings to start the month. That is up 9% from last year. It is down 11% versus their 5-year average, which is closer to 7,500 active listings this time of year. That means the months of inventory in Calgary is 2.3. That's slightly better than last month's 1.9, but still very much a seller's market. The benchmark in price in Calgary, $455,000. That is up 12% from last year. Looking at the monthly price trend here, you can see prices are continuing to accelerate. They're not following their normal pattern. Flipping over to the yearly price trend, this is where you can see those losses that we had in Calgary over the last few years now being eaten up by this big increase in prices across the Calgary real estate market. May and June are typically the two busiest months in the Calgary real estate market, followed by a summer slowdown. Seeing the slowdown starting early is a little bit abnormal, but if the last 12 months have taught us anything, nothing is normal in the real estate market right now. So this cool down should continue through the summer, but I do expect you to continue to see elevate numbers of sales and new listings, but lower than normal levels of inventory in the Calgary real estate market. The Edmonton real estate market saw a cool down this past month, but it's still very active. 2,700 homes were sold in a month. That's up 137% versus last year. It's also up 41% versus their 5-year average, which is about 1,800 homes sold in a month. With 4,200 new listings coming on the market, that is up 43% versus last year. It's up 15% over their 5-year average, which is about 3,600 homes sold in the month. There are currently 7,500 active listings on the market in Edmonton. That is down 95% versus last year. It is down 20% versus their 5-year average, which is over 9,300 active listings. That puts their months of inventory at 2.75, still in a seller's market, although it is slightly better than last month's 2.5. Their composite benchmark price in Edmonton is about $350,000, which is up 11% from last year. Looking at the monthly price trend here, you can see prices continue to accelerate, not following their normal monthly patterns, although we generally see a little bit of a slowdown at this time of year. The yearly price trend, you can see that much like Calgary, Edmonton is eating up those losses they had over the last couple of years. Now, I expect this slowdown to continue as the market returns to more normal patterns in Edmonton with elevated levels of sales, listings, but lowered levels of inventory as sales continue to outpace listings. Saskatoon is back to its record-setting ways with 576 homes sold in the month. That's up 76% versus last year. It's up 39% over their 5-year average, which is about 386 homes sold in the month. I believe this is the busiest month Saskatoon has ever had. There are 1,015 new listings put up for sale in the month. That is up 34% versus last year. It's up 15% versus their 5-year average, which is about 872 listings put up for sale in the month. Active inventory, 1,500 active listings. That is down 4% from last year. It's down 25% from their 5-year average, which is closer to 2,000 homes up for sale this time of year. That puts the months of inventory in Saskatoon at 2.7, still in the seller's market, although it did slightly improve from last month's 2.5. The benchmark price is up 12% in Saskatoon, $330,000. That now means that benchmark price is higher than it has ever been in Saskatoon. All the losses they had since 2014-ish have now been gained, and prices specifically in single-family homes are higher than they ever have been, although townhouses and condos still have a ways to go there. Talking with local real estate agents in Saskatoon, I pulled out a couple of nuggets of really interesting information. 20% of all homes sold last month were sold over asking price, and single-family homes continues to be where they see the most activity, and more specifically, homes that are above their average price are the ones that are seeing the most active market, where we're seeing the most people offering over asking prices there. Condos and townhouses, though, those continue to be a much more balanced market there. The Winnipeg real estate market continues to be one of the hot spots in Canada with over 2,000 homes sold last month. That is up 46% versus last year. They have 2,500 new listings came on the market. That is up 4% from last year. Their active listings, though, 2,700 active listings, down 40% from last year. Months of inventory in Winnipeg is 1.4. It improved just slightly from last month's 1.3. The benchmark price in Winnipeg is $320,000. That is up 15% from last year. Talking with local real estate agents in Winnipeg, one thing they talked about was market activity continues to be extremely competitive across pretty much every price point and every type of property. Inventory levels continue to be a problem, and that's continuing to drive up prices as every property seems to be in competitive multiple offer situations. And until we see more inventory come on the market consistently in Winnipeg, we're going to continue to see this upward pressure on real home prices in Winnipeg. Did home sales slow down in Toronto last month? Yes, they did. But make no mistake, the nearly 12,000 homes sold last month in Toronto is more homes sold in 1 month than any single month in 2020, 2019, 2018, and 2017. It's just slowing down in comparison to the absolutely silly last couple of months that they've had in Toronto. That is up 160% versus last year, and it's up 26% versus their 5-year average, which is about 9,200 homes sold in the month. Their new listings was 18,500 new listings in a month. That is up 104% versus last year. It's up 2% over their 5-year average, which is also about 15,000 new listings. Active listings in Toronto real estate market, there's currently 12,200 active listings. That is down 12% from last year, and it's down 34% versus the 5-year average, which is about 17,000 active listings. That means the Toronto real estate market has 1 month of inventory right now. That's down from last month's 1.2 months of inventory. So yes, sales cooled off, but new listings was down as well, meaning inventory continued to decline. The composite benchmark price for all property types across the entire Greater Toronto area was up 20% from last year at $1.045 million. Looking at the monthly price trend, you can see that in a normal year, this is when we start to see prices peak a little bit with a little plateau in the summer. Of course, this is not a normal year right now. And looking at the monthly price trend, you can see how much prices have accelerated in just the last year, but over in the last 5 years, of course, continued price acceleration in Toronto. Talking with realtors, one of the things they mentioned to me though was the scattered nature of the Toronto real estate market. That being some segments very hot still right now, while other segments are not nearly as active. Just because you put it up for sale doesn't mean it's going to get sold, no matter what the internet comments may say about how is this selling themselves. This does look like the Toronto real estate market is starting to trend back towards more normal, albeit still elevated levels of activity. And I think this trend is going to continue. We're starting to return back to more normal markets, but I think you're going to see sales continue to be elevated and new listings, but sales will probably still continue to outpace new listings, which will keep inventory levels low. So we will not see downward pressure on home prices in the Toronto real estate market until we're back into balanced market or a buyer's market. If it continues to have 1 or 2 months of inventory, prices are going to continue to have upward pressure. You'll see home prices increase in the Toronto real estate market until we get to a balanced market. I'm probably starting to sound like a broken record talking about the Ottawa real estate market and how hot it is, but that continues, although a little bit of a slowdown. Nearly 2,300 homes were sold in the month. That's up 70% versus last year. It's up 11% over the 5-year average, which is about 2,000 homes sold in a month. 3,100 new listings came on the market last month. That's up 89% versus last year, and it's up 11% versus the 5-year average, which is about 2,800 new listings coming on the market. With 1,800 active listings in the Ottawa real estate market right now, they're finally starting to get some inventory. They're actually double where they were to start the year, but they're still down 2% from last year and down 93% versus the 5-year average, where they'd have nearly 5,100 active listings at this time of year. So the months of inventory is 0.8 months. That's actually slightly better than the 0.6 months of inventory they had last month, but that still means with no new listings coming on the market in Ottawa, they would sell out of every single house in less than 1 month. And that of course has pushed their benchmark price up to about $650,000. That is up 34% versus last year. Looking at the monthly price trends, you can just see how much prices continue to accelerate in the Ottawa real estate market. They basically doubled since 2016, and without additional inventory, you're not going to see this trend slow down anytime soon. There just simply is not enough homes for sale for the amount of demand that we continue to see in Ottawa, and that's going to continue to put a significant amount of upward pressure on the Ottawa real estate market and home prices in Ottawa. Much like many other Canadian real estate markets, Montreal also saw a cool down but sales are still well ahead of where we would expect them to be, with nearly 5,400 homes sold in the month. That's up 64% from last year. It's up 14% over their 5-year average, which is about 4,700 homes sold in the month. There were 6,500 new listings put up for sale in the month. That's up 35% from last year. It's up 10% versus their 5-year average, where they'd have about 6,000 new listings coming on the market. The 11,480 active listings right now has basically stayed the same all year long. They've been around the 11,500 the entire year. It's down 17% from last year. It's also down 61% versus their 5-year average, where they'd have closer to 21,000 new listings. Active listings. Their months of inventory is 2.7. That's actually up from last month's 1.7, but still very much a seller's market in Montreal. The benchmark price is now over $500,000. That is up 32% from last year. Talking with real estate agents in the Montreal real estate market, a couple of things that stuck out to me was that how strong the $1 million plus market continues to be in Montreal. The other nugget of insight that I really liked there was how hot their condo market is. That continues to be a strong point in the Montreal real estate market. Although unlike single family homes where $1 million plus is the hot market, it's the sub $500,000 market that's hot. For condos right now, they've actually had a softer market for the luxury $1 million plus condos in Montreal. So yes, we are seeing a slowdown in the Montreal real estate market, but that's really only from the record-breaking pace they've been on for the last couple of months. Though I do think this slowdown is going to be something we're going to see continue. We will have elevated levels of activity though continuing on. Sales are likely to continue to outpace new listings, and that's going to keep inventory where it's at. Meaning there's still going to be continued upward pressure on prices in the Montreal real estate market. The Halifax real estate market continues to sizzle and inventory continues to be utterly depleted. 917 sales in the month, that's up 76% from last year. 862 new listings came on the market in the month. That is up 9.5% from last year. There's only 359 active listings in the Halifax real estate market. That's down 75% just from last year. Their months of inventory is 0.4, meaning they basically have 2 weeks worth of inventory, and then they're out of homes for sale in Halifax. The average price is $426,000 in Halifax. That is up 25%. The Halifax real estate market has the tightest inventory situation across Canada, has been like this for a number of months, a number of years actually, and until they get more inventory in Halifax or a significant reduction in demand, there's going to be that continued upward pressure on home prices in Halifax, and you're going to continue to see house prices continue to increase like they are in Halifax, unless something changes in that inventory situation in Halifax. That's a look at the data. But what does it all mean? And what do you need to know? What are some trends to look out for? Well, first off, this cooling off of the real estate market is not an imminent sign that a real estate market crash is coming. This is just the Canadian real estate market starting to balance back out again, because we have gone through an extremely crazy period. It was kind of a perfect storm of events that came together to drive demand through the roof. Let's quickly talk about that and then talk about some trends. So what caused this absolute crazy frenzy? Well, a lot of these sales were sales that were going to happen in the next couple of years. What happened was all of that demand got pulled forward here into the present from the future. So these were buyers that were going to move up into a bigger house, or they were going to buy their first house. Then you combine a couple of factors together and it gets them to go out and buy houses. Lower interest rates, of course, are going to get people to think about buying a house. But then you combine the fact that they couldn't travel anywhere and they didn't spend as much money on leisure and entertainment type activities. They've got more money for a down payment, more money in their pocket. Those lower interest rates, that gets them off the fence, and now they're going out and buying houses. And that's exactly what the government wanted to happen. They wanted to see activity in the real estate market, and we're still well above normal levels. We're still really elevated, very active in the Canadian real estate market. But what are some trends you need to watch going forward? Well, I think there's three here that are going to be very important. The first trend that you're gonna wanna watch is inventory levels. If they're below 3 months of inventory, that's a seller's market. That's gonna continue to push prices up. If you see them trend into that bounce market territory, 3 to 6 months, that will then flatten off price acceleration. If it does get into buyer's market territory, so more than 6 months of inventory, that is where you're going to see negative or downward pressure on the prices of homes in Canada. So watch inventory levels. The second thing you're going to want to watch is condos. I think this is going to be a big story and a big trend in the Canadian real estate market for the next couple of years. We're already seeing it. As single family prices have continued to accelerate up, the gap between single family and condos has gotten bigger, making single family homes unattainable for some buyers, or the pricing of condos more attractive to those buyers. Plus, people are starting to remember, I love being downtown, close to transit, stadiums, bars, restaurants, whatever it is, and that is gonna have people coming back to the city, and condos are what's going to appeal to them. Then there's going to be the investment market, and that leads us into point number 3, immigration. The Canadian government is committed to welcoming 1.2 million new Canadians to Canada in the next 3 years. That is going to be the largest influx of new Canadians since something like 1912, and that is going to put upward pressure on the demand for the rental market. You're going to see rental rates probably increase and the vacancy rate decrease because these people are going to need somewhere to live. They generally will rent for about 3 to 5 years, and then they'll look at purchasing a home. And that is what I think is gonna end up creating kind of a secondary boom to this big boom that we just had. So we'll have a little bit of a lull here because of all that demand that got pulled forward. And then as these new Canadians go from renters to buyers, that's gonna see another surge in buying activity, and that could push prices up. That's a long ways out, but that's a trend that I think you should watch. You know what else is another trend you should watch? This video right here. It's a first time home buyer video. You should definitely check that one out. And this video right here is what the YouTube algorithm says you need to learn next from Prairie Real Estate. As always, guys, thanks very much for watching.